What do you know? Active inventory in the U.S. housing market actually fell week on week. Got these numbers from Logan over at Housing Wire. Again, the active inventory was 739,000 roughly last week. This week, it is now 738,000. Now, the fall isn't much. It isn't that meaningful. And truth be told, we are up 32% year on year. But again, folks, I ask you, how could active inventory be down? Well, if you watch this channel and you remember the story that I told you probably 10, 12 weeks ago, even with falling demand, we were not only going to get falling listings, net new listings, but here's the thing. Here's the thing that most people missed, and you and I have been talking about for quite a while. We were going to get withdrawns and expired listings. Folks, if you've been looking in your housing market for any length of time, you know some of those listings are junk. They're garbage. They're wish pricing. They are overpriced. They've had no price cuts. This, folks, is a non-motivated seller. Non-motivated sellers, aka want to sell, don't need to sell. They are going to, quote unquote, throw their property on the market. And if for some reason they get their price, they will, of course, sell. But if they don't, they will just let the listing expire. They may, if they're frustrated with their agent, also withdraw. So this is how we can have record low transactions. We could have mortgage rates over 7% and active inventory fall. If you listen to a lot of the amateurs online and the crash bros and doomers, they wouldn't be able to explain this if they tried. But here on this channel, we brought this up 10, 12 weeks ago. We've talked with other agents. We told you this was coming. So this is the first time it has shown up. We'll see if it continues next week. But this should not be a surprise to you. If you are doing the work, you know exactly what 10, 15, 20 listings in your market are going to expire or be withdrawn. They're just not motivated sellers. So pretty interesting stuff going on there. I did see that the 10-year note is up again this morning. Again, we are going higher. It seems that inevitable at this point that mortgage rates will be over 7%. We do have two big economic reports this week that will be a driver for Fed rate cuts next week. On Thursday, we do get our third and final inflation reading for the month. Of course, that is PCE. It is forecasted to fall both in headline and core 0.1%. I ask you, we have to start thinking about what happens if it doesn't. And then on Friday, of course, we will get the third and final reading on employment. And again, the forecast is for a measly 100,000. It will be interesting to see if past reports, like many others, are revised down. It'll be surprising to see if this is up. It's just going to be interesting. And again, we might be running into one of those scary situations where inflation is rising and unemployment is weakening. That, folks, stagflation, that is where you're going to find out what the Fed's intentions are. If the labor market is weakening faster than expected, and inflation is rising, what will the Fed do? Well, I think they've been pretty clear. I don't think the Fed is particularly concerned with unemployment below 5%. I suspect they would get very concerned with unemployment over 5%. So again, what you and I should do with that data is we should tune in every Thursday to watch the weekly unemployment claims. It will be the drumbeat that we can follow to see if there's something wrong in the system. And again, remember, I actually think that the unemployment rate will go up on Friday. Again, the experts are saying it will stay flat at 4.1. I'm calling it to go up to 4.2, and that will be very interesting. Dan Bird and I had a conversation yesterday. We looked at the base effect. We look at weekly claims, and there's a chance, not a big chance, but a little chance that we could get a real shocker and surprise to the upside and get 4.3. That will get the Fed's attention, right? Go from 4.1 to 4.3 in a single month. Yeah, we've got a lot of important things happening Thursday and Friday. Hey, I want to let you know about an exciting interview I have scheduled for Wednesday. I've got Claudia Salm scheduled to interview her on Wednesday. Let me know what questions you have. I reached out to Claudia to talk about the Salm rule, so we will certainly do that. Is it right? Is it wrong? Is something wrong in the system? But more importantly, I told Claudia, I want to talk about how can we help the average American understand economics? What are the variables in teachings she would suggest? So if you want to ask a question of a legend in economics, you can go ahead and leave comments below. And I will do my best to get through all of those Wednesday with Claudia Salm. So again, the creator of the Salm rule. Again, this is something that was tripped earlier. It's 9 for 9 in declaring recessions. So I've been communicating with her on X/Twitter, and she agreed to a call on Wednesday. So that should be a lot of fun. Right now, the market is pricing in a 90% chance of a 25 basis point cut. It is still the other 10% is for a zero or a skip. We shall see. Again, we'll find out with inflation on Thursday and jobs on Friday. Don't know if you saw this morning, but it looks like Robinhood has made the leap into election trading. I have not checked this out, but yes, you can. I'm sure election trading. So now you can bet on Harris or Trump. It'll be interesting to see how this goes. Are the betting markets better than the analysts, the prediction markets? We'll see where that goes. So lots of things going on. I do want to let you know that we've got the next school session scheduled. It will be Matt, the Lumberjack, Dion, and myself Wednesday morning, 8 a.m. I will be posting the Zoom link here shortly. Again, go to school, one rental at a time under calendar, and you will find Wednesday morning, 8 a.m. if you want to come in, ask questions, be part of the fun. All three of us will be there, and we would love to see you inside school. Speaking of school, we've got a couple of new members. We have Brian Sturgeon. I usually don't say last names, but he was a fun interview yesterday. Brian invests in tax deeds. Yes, he is investing in tax deeds. He's done 40 plus flips in tax deeds. In that discussion, he talks about why you don't want tax liens, you want tax deeds. He is now a part of school. He joined school. We've created another category called tax sales. So again, Brian is in there taking all of your questions. If you want to know anything about tax deeds, tax liens, things of that nature, we now have somebody with experience. Again, what I love about having our school community is there's so many ways to make money in real estate. I've only done a very, very small sliver of them. So we are attracting other good people, and we are allowing them to show us what they know in other areas. So shout out Brian for that. And we also got Sissy. Sissy, thank you very much for joining. Hope you enjoy it. Don't forget to introduce yourself. Get up to level 2 for the 6-hour masterclass on creative financing. And of course, level 3 for your boot camp, 10-week boot camp. A lot of stuff going on there. We do see oil down this morning. I'm not sure if you're tracking that. Oil down 6%, $67 a barrel. A lot of this on what appears at first blush to be a cooling, hopefully, in the Middle East. We shall see. We did get an earning this morning on Semiconductor. What's going on with Semiconductors? They did beat top line, beat bottom line. So again, lots of good things there. When I think about inflation heating up, I ask myself, what are the chances we get a 50, a 25, or a 0? Again, the market is at 25. How do we get a 0? I think we get a 0 if inflation ticks up. That would certainly do that. And the job market is strong. So when you look at inflation and jobs, if inflation's hot and jobs hot, we could get a 0, right? One is on Thursday, inflation's on Thursday, and jobs are on Friday. So it is possible to get a 0, both hot. What gets us a quarter? Well, inflation being the same as last month or going down, and a as expected or weeks job number can get us a quarter. What could get us a 50? We would need falling inflation and a dramatic rise in unemployment, call it 4.3, where last month we were 4.1. So again, lots of things that will be decided by the end of the week. Tune in each day. We will do the daily financial news live. We do have some problem banks in commercial real estate. You and I knew this was coming. You and I knew that extend and pretend could not last forever. We are starting to see a clearer and clearer picture. According to, I want to give credit where credit is due, the McKeever Institute. McKeever Institute did a report on Wisconsin's biggest bank. Wisconsin's biggest bank is called Associate Bank. Apparently, the Associate Bank is the 49th largest bank in the country, which means it's got some size to it. And essentially, according to McKeever Institute, their loan portfolio is full of commercial real estate that has deteriorated and may be on the cusp of deteriorating enough to put the bank at risk. Folks, this was something I thought about back when the Fed cut 50. If you saw some of my discussions after the Fed cut 50, I said they were scared. One of the things that I guessed they might be scared about is the deteriorating commercial real estate market. And we did see some life in the commercial real estate when rates were falling, when rates were in the low sixes. We started to, feel better about our chances of getting through it. Now, of course, rates are up to 7%. Cap rates need to go up, which means values need to fall, and values need to fall hard. You can extend and pretend only so long. According to some other articles I read after reading McKeever's Institute article on Associate Bank, it looks like the industry-wide commercial mortgage-backed security market, so this is all commercial, has seen delinquencies rise from 4.4% to 5.7%. That was over the last 12 months. Office, just to show you where a lot of the pain is, has seen it go from 5.5 to 8.4. So a pretty big move. Also, it looks like in totality, we have this is a big number, $3 trillion in commercial real estate loans outstanding. Roughly between 540 and 600 billion rolls off every year the next 3 years. And folks, if you don't recall, last year, a lot of the resets were pushed. They gave them 1-year additions. So it would not shock me if there's $1 trillion in commercial real estate that will become problematic in 2025 and 2026. This is my story. It just feels like a slow moving train wreck where we're seeing some movement in Class A. See the deal that Ken McElroy did over the weekend, 33% discount on Class A. Folks, if Class A is getting 33%, we're getting 50, 60% discounts on Class B, Class C once the banks realize there is no joy in the system. We will undoubtedly see more problem banks. According to the FDIC, I just checked this morning, the FDIC problem bank list, really not concerning. Right now, it's at 66 banks. Given the totality of assets, they're all relatively small banks. But this could change. This will be something to watch. And if you go back and you graph the problem bank list, it exploded in 2022. Remember what happened? Silicon Valley Bank, First Republic, Signature, the list goes on a couple more times. We could get back there. Again, remember what I've said. I now think that we're going to have rates about 7% in 2025. That hurts the housing market. It's a disaster for the commercial real estate market. We have lots of people that frankly have done deals, lots of people who have lost 100% of their equity and they don't know it. This will be a problem. So, folks, I hope you appreciate that. That is the daily financial news. I'm now going to go book that 8 a.m. Wednesday call for Matt, Dion, and myself. And I just had my 8 a.m. cancel. So I might be back live in 15 minutes just talking to you, seeing what questions you have. I appreciate you being here. I might be back at 8 a.m. I might just chill out and have a coffee. But hey, you never know. I might be back in 15 minutes, go live here on YouTube, and we'll see what's what. Folks, have a great day. That is your daily financial news. Take care.